Hello friends, let's continue with the September 2025 CA Foundation RTP. We are continuing with the next problem, that is final accounts along with rectification of errors. So let's start discussing the points. The following is the trial balance of Messrs. Thomas and Associates. One second. Of Thomas and Associates on 31st March 2025. This is a trial balance given to you, and let's see what have they have asked. You are required to pass necessary journal entries in 1 to 4 above and prepare final accounts. So basically rectification entries have been asked and final accounts. So let's have a quick run through the trial balance. Capital will go to liability, drawings liability or less from capital, fixed assets, fixed asset additions, this will go to assets and this will be add to fixed assets. Additions are made on 1st October, so we'll charge 6 months depreciation on that. Trading debit, opening stock will be purchase trading debit, purchase return trading debit or less from purchases, sales trading credit, sales return trading credit or less from sales, you can write. Debtors asset, creditors liability, expenses P&L debit, fixed deposit with bank asset, interest on fixed deposit P&L credit, bank overdraft liability, suspense account coming in the trial balance means 100% there are errors lying in the trial balance. So nothing to do with this. Keep a star mark on that. We need to find out the errors. Rent P&L debit. We have paid up to 31st August. The year ends on 31st March. So April, May, June, July, August. 5 months will be prepaid rent. So less from rent and asset. Investments asset. Again, this will have a hidden adjustment. We have purchased investment on 1st August 24. So August, September, October, November, December, Jan, Feb, March. 8 months outstanding interest we have to calculate. It will be outstanding income, so P&L credit and add to investments, and bank balance asset. Closing stock on 31st March 2025. This is trading credit, comma, asset. Depreciation is to be provided 10% per annum on the fixed assets purchased during the year. They are clearly mentioning that depreciation you have to charge at the rate 10% on the asset which you have purchased during the year. Means whatever fixed asset you have in the opening, no depreciation to be charged on that. Only on the assets purchased during the year. On that also I will charge only for 6 months because it is purchased on 1st October 2024. Now, a scrutiny of the books of accounts revealing the following errors. So we'll do first rectification entries. We have withdrawn 1,50,000 from bank, which was debited to drawings account. So I withdrew 1,50,000 from bank and it was debited to drawings account. But out of this amount withdrawn, 90,000 was used in business for day-to-day expense. So basically, what is the story? 1,50,000 withdrawn from bank. Out of that, only 90,000 was used for business purpose. So the actual drawings were only 60,000. So what is the correct entry which we are supposed to pass? Expense account debit, drawings account debit to bank. Expenses account debit, drawings account debit to bank. Expenses 90,000, drawings 60,000 and bank 1,50,000. What wrong did we do? We debited full entire amount to drawings account. So drawings to bank 1,50,000. Then reverse, bank account debit to drawings account 1,50,000, 1,50,000. What gets cancelled? Bank gets cancelled. Yes. So what is the final entry? Expense account debit 90,000. Drawings 1,50,000 credit. Drawings debit 60. So can I say drawings net effect credit 90,000? Yes or no? So what will be the impacts? This will be added to expenses and drawings will be deducted from drawings. These are excessive drawings shown by us. Excessive drawings shown by us. So let's see whether these impacts have been given on the final accounts or not. Expenses, see, drawings deducted from drawings, and in P&L debit, expenses must have been added. 4,80,000 was the expense of the trial balance and 90,000 added. Now, let's go for the next rectification entry. Here it is. Purchase of goods for 1,20,000 were not recorded in the books of accounts. So we have done some purchase, but we have not recorded in the books of accounts. However, the goods were included in closing stock. That's but natural, but the entry is not recorded. So basically, this will be add to purchase, add to creditors. So trading debit purchases, yes, 1,20,000 in the original purchase, and in the creditors also balance sheet liability original creditors plus 1,20,000. This comes to total creditors. Fine. Next, purchase return of 7,500 was recorded in the sales return journal. So we have done some purchase return and we have shown as sales return. However, amount was correctly posted to the parties account on the correct side. Okay, so purchase return has been done, but wrongly shown as sales return. However, creditor's account was correctly recorded. So let's record this transaction. What will be the correct entry? Creditor's account debit to purchase return 7,500. Now, what wrong did we did? We have shown sales return account debit. However, creditors was correctly posted. Creditors was correctly posted. So sales return debit, creditors debit, and to suspense account. So this is 7,500, 7,500, and this is total 15,000. Let's reverse this. Suspense account debit to sales return to creditors. This is the reversal of the wrong entry. Now, let's see what gets cancelled. Creditors gets cancelled. Final entry is suspense account debit 15,000 to sales return to purchase return 7,500, 7,500. Guys, let's have a look. Now we had suspense account in the trial balance. Let's check. Yes, credit. This credit gets cancelled with this debit. It's compensating error. So we found out the error, and what was the error? Sales return have a debit balance. We have credited. So sales return, what we should do? Sales return, if it has a debit balance, it should be deducted from sales. But here it is having a credit balance. So let's go to the trading account, and sales return will be deducted from the to actual sales return. So sales return, if it had a debit balance, we would add it to sales return. But since here it is having a credit balance, so we'll deduct from the original sales return which is given in the trial balance. However, purchase return were given in the trial balance 5,17,500, but these were the purchase return which were actually not recorded. So we'll add to purchase return. So net purchase return increases, and that will be deducted from the total purchases. So this is what they have done. Here the rectification entry, you can see expenses to drawings, which we have already passed here. You can check here 90,000. Second is purchase to creditors. It should be 1,20,000. They have written here 345 by mistake. Next, suspense to purchase return to sales return 7.5. And the last error, expenses include 45,000 in respect of period after 31st March. So there were certain expenses which we paid during the year, but they belong to the next financial year. So basically they are prepaid expenses. So entry will be prepaid expense account debit to expense account. So let's see. Yes, prepaid expense to expense. This will go to the asset side and less from expense. Yes, less from expense. And this will go to the asset side, prepaid expense here. 45,000. And one more prepaid was there. Don't forget, guys, the rent one. Here it is, rent 127,500. We have paid April, May, June, July, August, 5 months advance. That comes to, so 18 lakh 7, sorry, 1 lakh 27,500 will be for how many months? Will be for how many months? Let's calculate, guys. 1 lakh 27,500 paid up to 31st August. April, May, June, July, August. So this is paid for 17 months. So how much for 1 month? 7,500 into 5, 37,500. This is the additional prepaid expenses. So less from expenses. Yes. Here it is. You can check. Right. 127,500 minus 37,500, and here in the asset side, prepaid. So these are the rectification errors which we have done here, discussed here, each and everything. Now, remaining items just deserve a posting. That can be easily done. That can be easily done. Now, what I'm trying to say, let's check the remaining items whether they're done properly or not. I think one problem I can find here, depreciation you should charge only on the assets purchased during the year, not on the assets which you have in the beginning, because it was clearly mentioned the 10% depreciation you should charge on the fixed assets purchased during the year, only on the fixed assets purchased during the year. So the one error they have committed here. Here also it should be only 75,000. This also should change. So basically 25 lakh 50,000 minus 75,000. This comes to 24 lakh 75,000. This should be your answer. Fine. So this is what was final account. Basically, I was just wanted to discuss the rectification of errors part, and rest all were very simple. nothing problem in that. And any hidden adjustment left? Yes, investments was left. Let's discuss that also. 18,75,000 into 12%, and this will be into 8 divided by 12. So that comes to 1,50,000. But have we got any interest on investments? The answer is no. So 1,50,000 here, and on the asset side also 1,50,000. That's it. All things covered. Yes, all things covered. Now let's go to the next question, that is NPO. A very different question on NPO. Let's see. Dr. Malik started private practice on 1st April 2024. So started means previous year items are not there in this question, with 8 lakh of his own fund and 12 lakh borrowed at a rate of interest of 12% per annum on security of his life policy. So basically doctor started his practice by investing his own amount, which is nothing but 8 lakhs, and 12 lakh he borrowed at the rate of 12% per annum, and he gave in the name of securities life policies. His accounts for the year were kept on a cash basis, and the following is the summarized cash account. Fine. So cash account is given here. Let's read this afterwards. You are required to prepare his private income and expenditure account and capital account. So guys, if you don't revise this sum before you go for the exams, you will get a little shock, because they've asked you a private practice income and expenditure account. That's nothing but an income and expenditure account. But they've asked you an additional thing which they have never asked in NPO career, is capital account. So let's see how to work out the own capital. So he has introduced own capital. So entry will be bank account debit to capital. Where is the solution? Let's check one by one. Yes, this is income and expenditure account, and here is capital account. So bank account debit to capital, 8 lakhs. You also took a loan of 12 lakhs. So it will be bank account debit to loan account. That would not come. Prescription fees, that will be income. Visiting fees, income. Lecture fees, income. Let's check all these three things. 26 lakh 40,000. Yes, 10 lakhs and 96,000. Next, pension received. Pension is always added to capital because it's a one-time receipt. So it is bank account debit to capital. So this will be capital account. This will also be capital account. Let's say here it is capital account. Here 12 lakhs. Now medicines purchased. This will be expenditure, but surgical equipment, this will be asset. Motor car, asset. Motor car expense, wages and salaries, expense rent of clinic, expense general charges, expense household expenses, less from capital. Purposely they have asked capital account. Household furniture, don't say asset. Again, this is drawings, less from capital. Read the word household furniture. Expenses on daughter marriage, again this is drawings, less from capital. So basically three drawings are there. Interest on loan, expenditure, balance at bank, asset, cash in hand, asset. 1/3 of the motor car expense may be treated as applicable for private use of car. So motor car expenses, we'll see this 4,80,000 out of that 1/3. 4,80,000 into 1 by 3. 4,80,000 into 1 by 3, that comes to 1,60,000 only. Again, that will be treated as drawings. So let's check this. Yes, capital account 1,60,000 drawings, household expenses, daughter's marriage, and household furniture, all were drawings. Yes, so all drawings recorded here. And motor car expenses, let's check here. Motor car expense total 480 minus 160 it should be. Motor car expense 480 minus 160, that comes to 320. Let's check. Yes, 320. So motor car adjustment done. Next, 30,000 of the salaries are in respect of domestic servants. So this is adjustment related to salaries, wages and salaries. 4,20,000 out of the 30 is personal use. So 4,20,000 minus, it should be 30,000. Again, there's a printing error. This should come to 3,90,000. And again, it should go to capital account 30,000. Yes, I've already rectified the same. Next, stock of medicines. Guys, now whenever opening stock, purchases and closing stock, any two out of the three items appear in the question, you need to prepare a consumption formula. That is nothing but medicines consumed. So medicines consumed, no opening stock because the doctor has just started the business. Add purchases 9,80,000, less closing stock 380. Let's see this. They must have done this. 9,80,000 minus 3,80,000. Yes, correct. And 6 lakh is the expenditure amount. Next, you are required to prepare. That's it. I think we have covered all the adjustments. Let's check. This is all expenses, basic expenses. Yes, here we have covered everything. So basically this is the correct income of the doctor, 18 lakh 46. This will go to the capital account and this will be the closing balance of capital. However, the closing balance of capital has been correctly calculated by the ICA. This was just a printing error while recording the salaries and wages of domestic servants, nothing else. So this is a nice sum on NPO in which they have asked income and expenditure account and capital account. Let's go to the next sum of this RTP, that is, I think it is accounting from incomplete records. Very nice question, small question given this time. Now, Freeze Limited gives you the following information. There's some information given. What they've asked, you are required to calculate total sales and total purchase. Very nice. Total sales and total purchase means cash and credit both comes. So basically, they must have prepared, I think, debtors creditors account. Yes, debtors account we have, creditors account we have. Fine. From that, we will find credit sales and credit purchase, and in that, we'll add cash sales and cash purchase will be given in the problem. Let's start. Opening debtors, two balance brought down, 157,500. Opening creditors also we have 180 to 250, so it will be by balance brought down. Here it is. Yes. Next, bills receivable received in there. So it is bill drawn basically. Bill receivable account debit to debtors account. So in the debtors account credit side, by bill receivable 105,570. Bills payable issued during this. So this is basically bill accepted by creditors. So it will be creditors account debit to bills payable. So on creditors account debit side to bills payable. Here it is 119250. Next, cash received from debtors. It is cash account debit to debtors. On the debtors account credit side by cash. Yes, we have 3,51,000. Cash paid to suppliers, so it is creditors account debit to cash, 3,87,000. Creditors account debit to cash, yes, 3,87,000. Next transaction, very nice question. Bad debts recovered. Guys, be careful. Bad debts recovered entries cash to bad debts recovery. So no, it will neither affect the debtors, neither the creditors. Bill receivable endorsed to creditors. Bill endorsed. So it is creditors account debit to bill receivable. So creditors account debit side to bill receivable. Correct. Bill receivable dishonored by customers. So whenever we draw a bill, it is bill receivable to debtors. But when it is dishonored, reverse entry. Debtors account debit to bill receivable. So debtors account debit side to bill receivable. Yes, correct. Next, here we have lots of transactions. Discount allowed by suppliers. They allowed, so we received. So creditors account debit to discount received. 15,750. Next, discount allowed to customers. So we allowed discount. So discount allowed account debit to debtors. So debtors account credit side by discount allowed. Yes, correct. Next, endorse bill receivable dishonored. So endorse bill dishonored. So what is the entry for bill drawn? Listen to me. Bill receivable to debtors. What is the entry for bill endorse? Creditors account debit to bill receivable. And now endorse bill dishonored. So it will be again debtors will increase, again creditors will increase. So debtors to creditors, it should be the entry. So debtors account debit side to creditors, yes. And creditors account credit side by debtors. I hope it is clear. Once the bill is drawn, then it is endorsed and again it is reversed. So endorse bill dishonored, debtors account debit to creditors. Add to debtors, add to creditors. Next, nice transaction. Sales return to debtors. So debtors account credit side by sales return. Here it is. Next, bill receivable discounted. Bank account debit, discount account debit to bill receivable. It will not affect my debtors account. Discounted bill receivable. I think this is dishonored. Yes, debtors account debit to bank. The printing mistake, it is dishonored. Cash sales. This is cash to sales. It will not affect the debtors. Cash purchase to cash. Debtors on 31st March. This is closing debtors 184,500. And we must be having closing creditors also 213,750. So it will be two balance carried down. Yes, I think all transactions are done. From the creditors account we'll get purchases 607,500 and from the debtors account we'll get credit sales So cash sales plus credit sales is total sales, and credit purchase plus cash purchase is equal to total purchase. So these were the three prime questions: final accounts, NPO, and accounting from incomplete records. I hope you have understood the entire three sums. Just wanting to discuss that the partnership questions which they have asked in the RTP, basically retirement of partner. This is the similar question, or you can say the same question, only the amounts have changed. This is similar to ICI module practical question 1. Every adjustment, everything same. And as far as death of partner is concerned, this is also similar to ICI module practical question 2. If you remember the name of the partners, Paul, Peter, and Prince, in the ICI module practical question number 2, the big question which is given on the module, the same question they have asked, same question. But I hope it is very clear. The entire RTP I have discussed with you. These are the same questions or similar questions of retirement and death. So you can always, you have done the module, so no need to waste time on that. Even if you still have any doubts, you can contact on the details given on the YouTube channel. We'll continue with the next problem, that is on issue of shares, that is company accounts. Basically, A Limited is a company with an authorized share capital of rupees 2 crore 50 lakh in equity shares of 10 each. So basically 25 lakh shares are there, of which 15 lakh shares had been issued. Out of that, 15 lakh already issued. So what is the balance left? Balance left 10 lakh shares. Fully paid on 31st March 2025. The company proposes to make a further issue of 3,37,500 of these rupees 10 shares at a price of 14 per share. So out of the balance 10 lakh shares, company proposes to issue a further 3,37,500 equity shares of 10 each at a price of 14 per, means issue is at premium. The arrangement of payment being 2 on application by 31st May, allotment on 10th June at 5 per share, which includes premium. So basically it is 1 plus 4, 1 allotment, 4 premium, because 4 rupees premium. So 5 plus 2, 7, and final call for the balance to be made. 5 plus 2, 7, 7, and the final call will be 7. So basically 3 installments: application, allotment, and final call. 3 installments we have. We will have 6 entries: 2 for application, 2 for allotment, and 2 for final call. Now the company wants to issue 3,37,500 shares. Applications were received for 14 lakh shares. Guys, it's a clear case of oversubscription, and the company has 3 options to deal with: either to reject or refund the excess applications. Second option is to adjust with allotment, or we can use the word pro rata, or the third option is both: partial reject, partial adjust with allotment. But we are open for all. The question has to mention what has to be done, and then is as follows. Applications for 25,000 shares received allotment in full. Means those who applied for 25,000, they got full 25,000 shares. First come, first basis. First category. Second category, applicants for 1,25,000 shares. Means those who applied for 1,25,000 shares received an allotment of 1 share for every 2 applied for. Means those who applied for 1,25,000 shares, they got 1 share for every 2 applications. Means if you have applied 2, I will give you only 1. No money was returned to these applicants. The surplus on application being used to reduce the amount due on allotment. Means those who demanded 2, they were allotted 1. So whatever excess money company collected, company did not refund. Company said we will adjust with allotment. This is second category. Now third, applicants for 12,50,000 shares. Now next category is 12,50,000 applications. Received an allotment of 1 share for every 5 applied. So those who applied for 5, they got 1 share against that 5 shares applications. The money due on allotment was retained by the company. Again, there the company retained the money which was receivable on allotment, and the excess being returned to the applicants. So this is basically both options. It is refunded after keeping the allotment money. Balance money, whatever the company has been refunded. So basically, in the third category, company retained the allotment money which was supposed to be received from the shareholders, and the balance, if any, has to be refunded. So your company is exercising both options. In case number 2, that is point number 2, company is adjusting the excess money with allotment due, and in case number 3, company is refunding the excess money after making adjustment with allotment. Means after keeping the allotment money which is receivable from the shareholders, any excessive money company is refunding. The money due on final call was received on the due date. You are required to pass in transactions, including bank transactions, in the books of A Limited. Now, I prepared one working note. I'll explain you that first. 14 lakh applications came total. This is category 1, category 2, category 3. Those who applied 25, they got 25. Those who applied 2, they were allotted 1. So those who applied for 1 lakh 25, they got only 62,500 shares. And those who applied for 5, they were allotted 1. So those who applied for 12 lakh 50, they got only 2 lakh 50,000 shares. Basically, what I am trying to do, let's check. 1 second. Let's keep this original. Now, total applications were how much? 14 lakh. Let's check. 25,000 plus 1 lakh 25. 1 lakh 50, 1 lakh 50 plus 12 lakh 50. 14 lakh. Application gets tallied. Fine. This working note, guys, you are supposed to prepare in the examination. It's a very simplified working note. Instead of preparing a table, you can prepare this. Now, how many shares company issued? 3,37,500. 25,000 plus 62,500. That is 87,500 plus 250. That comes to 337,500. So I have matched total applications with applications and total allotment with the shares issued. So that you have done the working correct till here you can check. Now, first category, no problem. Second category, application money received. 1 lakh 25 into 2 rupees is the application. This much money I received, that is 25 lakh. Let's application money to be received. How much I am supposed to receive? That is 62,500 into 2, 1 lakh 25. What is the excess amount I have received? 1 lakh 25. Now, second category mentioned that we have to adjust the excess money which I have received with the allotment due. How much was allotment due? 5 rupees. Or how many shares? 62,500 shares. So, this was the amount which I was supposed to adjust with allotment. So, I think everything got adjusted with allotment. Let's check. 62,500 into 5. 3 lakh 12,500. Excess money with me was only 125. So, a full amount I will adjust with allotment. Here, the third category. How much applications? 12 lakh 50 into 2. That comes to 25 lakh written here. Bracket also written there. But how much application money I am supposed to receive? Or 2 lakh 50 into 2, that is 5 lakh. What is the excess money I have? 20 lakhs. Now, the third category mentioned whatever amount was due on allotment, the company has to adjust. So, 62,500 into, sorry, not 62,500, 2 lakh 50 into 5, 12 lakh 50. So, out of 20 lakh, 12 lakh 50 company will keep with them and the balance will be refunded. So, this is the working note. Please understand the working note and then proceed. Now, let's go for the journal entries. First entry, bank account debit to equity share application. That will be 14 lakh shares into 2 rupees, that is 28 lakhs. Second entry, over subscription, I will say big entry, a jumbo entry, equity share application account debit to equity share capital to equity share allotment to bank account. Here it is application credit debit. 3,37,500 were the original shares into application 2, that is 3,37,500 into 2, that's come to 675. To bank 7 lakh 50 and this is 13 lakh 75 adjust with allotment. Here is the working. 1 second. Here 12 lakh 50 here 13 lakh 75. How 1375 came? It's very simple. 12 lakh 50 here and plus 1 lakh 25. Yeah. So how it is adjusted? 12 lakh 50 of category 3 here plus how much money I was having in category 2? 1 lakh 25. Excess money. Entire money got adjusted. Total comes to 13 lakh 75,000. This is how it has been adjusted. So 13 lakh 75 allotment. Then Allotment money due, equity share allotment account debit to equity share capital to securities premium. Now how many shares? 3,37,500 into 5. Let's calculate. 3,37,500 into 5. Yes, 16,87,500. In share capital 3,37,500 into 1, 3,37,500, and the premium 3,37,500 into 4, 13,50. Then bank account debit to equity share allotment. Now, how much I am supposed to receive on allotment? 16,87,500. But 16,87,500. But how much I have already received from the company? 13,75. 13,75. So balance is receivable 3,12,500. This is the important one. Then equity share final call account debit to equity share capital 337,500 into 7. 337,500 into 7. That comes to 23,62,500. And bank account debit to equity share final call. So very nice question. I would just like to emphasize the working note. Basically category 2 and category 3. In category 2 they had mentioned that excess application money received should be adjusted with allotment. The company received only 1,25,000 excessive money, but the amount due on allotment was 3,12,500. So entire money got adjusted with allotment. Whereas in category 3, excess application money received by the company was how much? 20 lakhs. Out of that, the company mentioned that whatever amount was due on allotment, company will keep with itself or company will adjust and the balance will be refunded. That's it. Let's go to the next question. That is issue and redemption of debentures. On 1st April 2025, Weavers Limited issued 5,12% debentures of 100 each at a discount of 5%. So basically, it is issued at discount. 100 debenture issued at 95. Redeemable on 31st March 2020. So redeemable at par, nothing mentioned. So basically 100-100. Issue was oversubscribed by 1 lakh debentures. Again, oversubscription coming. So basically 6 lakh applications came who were refunded their money, and here straight refund was done. Interest is paid annually on 31st March. So interest is paid annually. You are required to prepare journal entries at the time of issue of debentures. One journal entry for issue of debentures. Discount on issue of debenture account and interest account, debenture holder account, assuming TDS 10%. Fine, guys. What should be the entry? Issued at discount and redeemed at par. So it is bank account debit, discount on issue account debit to 12% debentures. Okay, they have done 2 entries, application received and application transfer. That's also fine. Bank account debit to debenture application. This will be 6 lakh debentures into how much? 95. 5,70,000. Yes. Then debenture application account debit, discount on issue account debit to debentures and to bank because we have refunded. Application credit debit same. Discount on issue, basically we have issued how many debentures, guys? 5 lakh debentures into discount 5. 5 lakh, 1 second. Yes, 5 lakh debentures into 5. How they have done? 1 second. 5 lakh debentures of 100 each at a discount of 5. Okay, 5 lakh into 5 divided by 100. So basically thousands, 25,000. 1 second, let me check. I think there's some issue. 6 lakh into 95, that comes to 5 crore 70 lakh divided by 100. So rupees are in hundreds. So 5 lakh 70. 5 lakh debentures into 5 rupees discount divided by 100. So 25,000 is discount. Debentures, in debentures, 5 lakh debentures into face value, that is 100. 5 lakh into 100 divided by 100. So 5 lakhs. And bank balancing figure 95,000. That is 1 lakh debentures into 95. That's it. Very simple question. Only entries relating to issue of debentures they asked. After that, they have asked ledgers, discount on issue of account, interest account, and debenture holder account. Fine. So basically, what is the entry for issuing debentures? Basically, bank account debit to debenture application account debit, discount on issue debit to 12% debentures. Done. And these were redeemable on 31st March 2030. When did the company issue? 2025. So proper 5 years. So company has written off entire discount in 5 years. 25,000 total discount divided by 5 years. So 5,000 is the annual discount. So what they have done here, guys, let me take one by one. We have recorded the entire discount on issue. After that, we have written off discount over a period of 5 years. So what is the entry for writing off every year? P&L to discount on issue 5,000 and balance carried on 20. Same P&L to discount on issue and balance carried on 15. P&L to discount on issue 5,000, balance carried on 10. P&L to discount on issue 5,000, balance carried down 5,000. And again P&L to discount on issue 5,000 and the account gets closed. They have asked interest account and debenture holder account. Now, what are the entries for interest? Basically, interest account debit, debenture interest account debit or interest account debit to debenture holders to income tax payable. What is the entry? I'll write here interest account debit to debenture holders account to income tax payable, or you can say TDS payable, income tax payable. Now 5 lakh debentures into 100, okay, into what is the rate of interest? 12% divided by 100, rupees in 100, 60,000 it should be there. Yes, so debenture interest 60,000. 10% is the TDS, so 6,000. So balance comes to 54,000. So interest account debit to debenture holders to tax payable. So to debenture holders 60,000. One posting is okay, and debenture holders credit side by interest. Correct. Then what we are supposed to do? Transfer interest to P. No, wait. First, this is interest due. 12%. Next will be interest paid, debenture holder account debit to bank account 54,000. Let's say debenture holders to bank. No need to write this. 54,000. Here also debenture holders by interest, it should be not 60, it should be 54 only. If you go by the posting rules, it should be 54. Check, guys. Interest account debit 60, I've done here. Two debenture holders 54. So by interest 54 only it should come. And then debenture holders to bank, we have paid. Then income tax payable to bank, that is not required. And the last entry is transfer of interest to P&L. P&L account debit to interest 60,000. The same situation will continue for full 5 years. I'm not going to discuss every year again and again, but this is how we are supposed to do. Don't write this 6,000. Okay, let's go to the next question, guys. Okay, next question, guys. I'll clear this. XYZ Limited has issued 2,512% convertible debentures of 100 each. Again, debenture question. Number of debentures 2,500. Rate of interest 12%. Convertible debentures of 100 each. Face value redeemable after a period of 5 years. According to terms and conditions of the issue, these debentures were redeemable at a premium. So redemption at premium 100-105. The debenture holders also had the option at the time of redemption. So the debenture holders were given an option because they were convertible debentures to convert 20% of their holdings into equity shares of 10 each at a price of 20%. So basically conversion is also happening. Conversion is nothing but basically one type of redemption. Conversion also happening at premium. A share of 10 issued at 20. So redemption also at premium, conversion also at premium. And the balance in cash. So the debenture holders holding 20% of their holdings are eligible for conversion option. So suppose if you have 100 debentures, not entire 100 debentures are eligible for conversion. 100 into 20%, that is only 20 debentures are eligible for equity shares if the debenture holder wishes to convert their debentures into equity shares. Debenture holders amounting to rupees 50,000. Now read properly. Amounting to 50,000 rupees. opted to get their debentures converted into equity shares as per the terms of issue. Now, debenture holders amounting to 50,000. So first of all, what are the number of debentures? Divided by 100. So I'll get 500 debentures. First, I converted them into debentures. It is 50,000 rupees debentures. Of 100, it means there are how many debentures in all? 500 debentures. How many debentures in all? 500 debentures. Out of this, only 20% eligible for conversion. 100. Balance 400. This will go for conversion. This will go for cash. Correct? Now, very simple. So, 100 debentures into what is the redemption price? 105 divided by issue price of equity shares 20. Let's check. 100 into 105 divided by 20. 525 equity shares of rupees 10 at the rate 20. These are the number of shares company will issue. I hope it is clear. Now, 400 debentures. Let's see. First 525 shares. Yes. Correct. What are the debentures left? 400 debentures, and the balance 400 into 105, they will be going for cash option. So this was a very small question on redemption of debentures. Now we'll go for the next question of company accounts, and that is basically 17th question of the RTP. I hope guys you are enjoying the session. I hope I'm delivering the best which you want you to understand and you get the best out of it. Following is the extract of balance sheet of Super Limited as on 31st March 2025. Authorized capital 7,50,000 equity shares of 10 each. 62,500 10% preferences of 10 each. Issued subscribed and paid up capital 6,75,000 equity shares of 10 each. 60,000 10% preferences of 10 each. Fine, authorization are given. Reserves and surplus, general reserve, it's a free reserve. Capital redemption reserve, it's not a free reserve. Securities minimum collected in cash, it's a free reserve. Collected in cash is given. And profit and loss, it's a free reserve. On 1st April 2025, the company decided to capitalize its reserves by way of bonus. Okay, so basically this question is on bonus issue. At the rate of 2 shares for every 5. So for every 5 shares, I will issue 2 shares. Fine. That's it. Show necessary journal entries in the books of the company and prepare extract of the balance sheet. No problem. So basically, these are fully paid up equity shares, guys. So only 2 entries: bonus declared, bonus issue. Let's go to the solution direct. I think we'll write here held and issue. What was the ratio given? 2 shares for every 5 held. 2 shares for every 5 held. Fine. How many shares did the company have? In the issue, equity shares 6,75,000. So 6,75,000 and how much? 6,75,000 into 2 divided by 5. 2,70,000 shares will come. Of how much? Let's say of 2,70,000 shares of 10 each. That comes to 27 lakh. There is one sequence prepared for, not prepared by me, but prepared by the Companies Act. Basically, in that order only you are supposed to utilize the reserves. The sequence is C, S, C, D. C stands for CRR. Do we have CRR? Let's check. CRR. Yes, we have 3 lakhs. We'll use that 3 lakhs. We need 27 lakhs, guys. C for CRR done. Securities premium, yes, we have in the balance sheet 1,87,500. Yes. C, S, C for capital reserve. We don't have capital reserve. We have straight away general reserve and profit and loss. Guys, you can use either of the case. Both are free reserves. There is no sequence in that. They have used general reserve full 9 lakh and balance P&L they have used. To bonus to shareholders. Then bonus to shareholder account debit to equity share capital, being bonus shares issued. Now, let's go to the extract part of the balance sheet. Here, first of all, you have to write balance sheet extract as on 1st April after bonus. equity and liabilities, shareholder fund, share capital, reserve and surplus. This is the only part which you are supposed to prepare when extract is asked. That is equity and liabilities, shareholder funds, share capital, reserves and surplus. Now you have to prepare separate notes for share capital and reserves and surplus. Share capital, authorized share capital. Let's check, guys. How much was the authorized capital given? 7,50,000 equity shares. Right? Out of that, how many already issued? 6,75,000. So guys, always check the authorized limit before you go ahead. 7,50,000 minus 6,75,000. What was the limit left with the company? How many shares company can still issue more? 75,000. But how many bonus shares company issued? How many bonus shares company issued? 2,70,000. Means can I say company has exceeded the authorized limit? Yes, the company has exceeded the authorized limit. So basically 6,75,000 plus 2,70,000. This will be my authorized capital. 9,45,000. How it came? 6,75,000 was the existing shares issued plus 2,70,000. This comes to 9,45,000 shares of 10 each. Preference as it is 62,500. 10% preference of 10 each. This is not including the totaling lines. Issued subscribe again 9,45,000 equities of 10 each. Out of the above, 2,70,000 shares are issued by way of bonus or other than cash. And other than cash, we have to write this note because whenever a company issues bonus shares, company does not collect any money from the shareholders. And preferences as it is 6 lakh. This is share capital note 1,50,000. Then reserves and surplus CRR we had 3 lakh. We utilized full 3 lakhs from the entry. Then we had securities minimum, we utilized full. Then we had general reserve, we utilized full. We had profit and loss 15 lakh, but out of that we utilized only 13 lakh 12,500. So balance was 187,500. Total reserve 71,87,500. With a mistake 7187, no, it's only 187,500. So this is the extract of the budget. I hope guys the entire company accounts video is helpful to you. Take the best advantage of it. Score good marks. Thank you.